I'm Harry Morrow, Senior Investment Analyst at Loftus Peak. Happy New Year and welcome to Update Plus, a monthly recap of the big disruptive trends that are driving business and the portfolios we manage. Almost 6 years ago, we penned a piece about television and the disruption it faced as viewing increasingly shifted towards streaming. Our view was of increasing consolidation and that incumbents, particularly Disney, were likely to see much more red than was expected by bullish investors as they disrupted their highly profitable cable and broadcast businesses to deliver streaming services. As such, we stuck with pure play disruptor Netflix. Since then, Disney's share price has fallen 9%. Paramount, now the owner of 10 here in Australia, saw its share price decline 75% over the period until it was merged with Skydance a few months ago. Warner Bros. Discovery, which has properties such as Game of Thrones, The White Lotus, and Harry Potter, was spun out of AT&T and merged with Discovery in April 22 to return 13%. And Fox, which more or less exited the business when it sold its entertainment assets to Disney a month before our piece, has delivered a return of 93%. And Netflix? Its share price appreciated 160%. This was more than 270% a few months ago before we got news of even more unprecedented consolidation in the media industry. More on that in a moment. Netflix is a key example of how powerful the combination of looking at the world through the lens of disruption and a consistent valuation framework can be. This is why we believe a strategy that focuses on the long-term, secular or disruptive trends rather than shorter-term dynamics is important when investing. The 2 points made clear by the past 6 years are that 1, it is incredibly difficult to disrupt your own business model. Those that tried competing with Netflix by sacrificing highly profitable linear TV businesses have experienced significant pain. And 2, in a streaming world, distribution is king, while content is a differentiator, as evidenced by the wave of M&A and consolidation in the industry. That consolidation has continued with Netflix and Paramount Skydance's bids to acquire Warner Bros. Discovery for $30 a share or $83 billion US, where Netflix is currently the preferred bidder. Without dwelling too much on the irony of Warner, whose former CEO Jeff Bewkes dismissed the threat of Netflix back in 2010 as, "Is the Albanian army going to take over the world?" now being acquired by said Albanian army, it does represent an about-face by a company that repeatedly said it would rather build than buy. On the one hand, Netflix has proven again and again that it has the ability to elevate content to a level far greater than competitors due to its scale and technological advantages. Suits became the biggest TV show on its platform in 2023, having originally run between 2011 and 2019, even leading to a spin-off by Peacock. Additional value created, but not captured, by Netflix. Even Breaking Bad's very existence past its second season has been credited to its availability on Netflix. Warner Bros. Discovery has no shortage of content to create value from. It is arguably the best asset in Hollywood, given its ownership of HBO and the Warner Movie Studios. On the other hand, this makes the story much more messy. While the cable and broadcast distribution assets aren't being acquired, the movie business and distribution via legacy theatre companies is. Warner Bros. Discovery also produces and licenses content to Netflix competitors. Do they continue those relationships or sacrifice the billions in licensing revenues and bring them onto its own platform? Some also see the acquisition as a defensive maneuver against the 800-pound gorilla in the living room, YouTube. Whether positive or negative over the long term, an acquisition that adds more debt to the mix, leaves questions around a company's competitive positioning, and results in a much less clean, pure-play story is likely to command a lower premium in the short and medium term. Looking ahead, we expect 2026 to be a pivotal year in streaming. Who acquires Warner Bros. Discovery, Netflix or Paramount Skydance, will likely be decided, but even more likely is that it ends up in the courts for antitrust concerns. TV advertising is likely to be strong off the back of an important and contentious US midterm election. Also in the US, sports content's transition to streaming is likely to provide multiple years of strong growth, especially in 2026 as the Football World Cup takes place in North America. I'm Harry Morrow, and this has been Update Plus. Thanks for listening. See you next time.